What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 20th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a few key topics to talk about as we'll keep the update relatively short. We're going to be taking a look across cryptocurrency, equity, and commodity markets, especially focusing in on all the craziness we've seen in crypto, and then also talk about a variety of headlines, including not only some updates on the crypto space, but also taking a look at the $200 billion that the Fed has had to inject in the repo market. The number's been growing, and we still are left with a lot of questions. Anyways, we've got a lot of things to discuss, guys. Let's go ahead and dive right into it right after our quick sponsor. Our sponsor for this episode is Dashlane. Dashlane revolutionizes security and password management. Manage dozens of passwords with one secure login by inputting your passwords into your Dashlane account. Dashlane also offers a variety of tools like its password generator to heighten the security of your online presence or protect your account after major data breaches on your favorite platforms. And it's not just passwords. Dashlane also allows you to store encrypted files with ease, from passports to contracts, so you can always get access to your documents on the go. Get started today with Dashlane for free on your first device by heading to dashlane.com/datadash. Then if you want to get 10% off to access Dashlane across all devices and to use the VPN, use the code DATADASH. Alrighty, everyone, so let's go ahead and start off by taking a look at cryptocurrency markets. As you can see, over the last 24 hours, Bitcoin is up around 3%, and the general market is following suit, with many altcoins outpacing Bitcoin as well. But we've got, again, a general trend here where Bitcoin has been able to gain a little bit of dominance, and most cryptocurrencies are hanging in the green. Good sign to see overall that markets are still growing. We're up about $10 to $12 billion in valuation over the last few days. So taking all this into mind here, what's really happened over the last 24 hours? Well, Bitcoin actually, as you can see here on the 7-day chart, and we'll emphasize this when we take a look at the overall technical analysis of Bitcoin and other cryptocurrencies. Bitcoin had a pretty stark dip during this whole kind of altcoin rally, but it came kind of sudden and out of nowhere. With a few thousand Bitcoin being sold on major spot exchanges, we saw Bitcoin's price drop around $500 to $600, but afterwards, slowly dipping in to the 4-digit range again. The never below 10K meme did not come true for the 5th or 6th time now. Finally, we actually had buyers coming in actually very quickly, and prices came back up very quickly actually to relative highs here over the last few days. So, really good to see. But we're still seeing strength again in Ethereum and some of the major market leaders here, some of them holding their gains. So we can see here again, as I talked about, over the last week or so, we've been able to see valuations rise of about $10 billion. It's good to see that. A lot of that, again, coming from other coins here. As we take a look, $78 billion in that same time frame we were just focusing on, all the way up to $87 billion. So, again, capturing the majority of that new market share. And we can see that being reflected in market dominance here. Now, I like taking a look here on CoinMarketCap and stuff. They provide some good summaries kind of in the charts. They keep it simple. But we're going to go ahead and do some deep diving TA in the sense of cryptocurrency markets. Now, as well, I just wanted to share with you guys as well, I've really got a new suite of indicators here that I'll be showcasing in the video, but we're not going to be using it here in the daily time frame. I've actually got a video coming up here in the next few days that kind of talk about my trading strategy. It's one important thing to note. If you guys are here and stuff, I'm assuming you probably don't mind me rambling a little bit. I'm actually going on a trip to go visit some friends here for the weekend. So I've pre-recorded a lot of awesome educational material for you guys over this weekend and the early part of next week. I'm just going to see some friends for a while that I haven't seen in a long time, and along with that, these educational videos are going to give you guys a lot of insight, predominantly the one that I'm going to post on Monday, which is going to showcase how I actually go about trading markets, and it's my really up-to-date strategy as to how I approach things. And as you guys can probably guess, it doesn't involve the daily time frame, it's the weekly, and in some cases the monthly that we utilize. So anyways, just wanted to let you know about these indicators here. But we'll go ahead and focus in on price here. Again, it's still building in to the wedge. Now, for a while, I considered the idea that we might be pushing to a descending triangle. And again, I know TA is subjective, guys, but to be fair, I think it's a little bit of a push. It's a little bit of a push to say that this is a descending triangle when every single time, right, we've been setting higher lows here, right? Again, maybe outside of an anomaly here, where we had maybe a slightly higher wicks than over here. But again, in most cases here, we're setting generally higher levels, right? Setting a low here at 9,585 is definitely different from 9,071, right? That's pretty significant here when we're talking about percentages. So again, not to mention, we had a decline in volume here, finally got a breakout here. The thing is, and I'll go ahead and put this in a more kind of bearish perspective, if markets don't pick up here, if Bitcoin doesn't pick up in the next 48 to 72 hours and break above this line of resistance, it's very likely that we're going to turn back down, all right? Even though I might not see this as a descending triangle, this is the opportune moment. The moment when Bitcoin dropped down to 9,600, set that low and rekindled back up most of its losses to turning back into its normalized price over the last 24 hours. This is the moment where we saw the resentment and the market, the resilience. I'm messing up on my English today. The resilience here, in the sense of price coming back, volume surging into the market, the most volume we saw since back here on the 6th of September. So again, we need to see that follow through. And if we're not seeing that, then this is likely going to pull back down, continue to coil on the wedge or break down until it has that momentum. Now, I want to go ahead and take a look over some of the major market indicators. Bitcoin dominance here, remaining relatively steady over the last 3 days here, gaining a little bit of the losses from back here on the 18th. But we have to take a look at the weekly trend, guys, right? This is what really matters, okay? And we'll go ahead and take a look at our indicators here. I'll give you guys a little bit of a preview in my indicators here. So as you can see, if you take a look across the board from the squeeze momentum indicator, we're near across on the weekly MACD, and the stochastic RSI looks like it's topping out here. This is a sign to me that we're setting up for a downturn back to this line of support at a minimum, right? I'm focusing on the broader trends here, guys, and not to mention we're testing towards a previous level of previous resistance, right? So these things right here, keeping in check as well with the sheer fact that Bitcoin dominance has exactly doubled from 36 to 72, right? All right, almost the 32.5 all the way up to 73%. You can really get nitpicky with the numbers, but either way, about a double in the percentage of Bitcoin dominance. I think it's time for a cool down. I think as we've seen Bitcoin's price increase in the market from the lows at 3,000, there's a lot of liquidity to start speculating and maybe start propping up altcoins as we go into retesting the highs of Bitcoin at 20K. If we get this breakout over the next few days, as I'm talking about with Bitcoin, and that new liquidity is coming in, buyers are speculating again on Bitcoin, getting excited again, hedging with Bitcoin against financial turmoil that's going on in traditional markets, then in this case, I think we could start to see a premature run up in altcoins and then really start to see the breakout when Bitcoin retests at 20,000 and liquidity has a good reason to exit out of Bitcoin into other plays, right? That's what I'm looking for here. And all the signs right here technically are showcasing this, that we're preparing for that trend shift. So even though it's not dramatic yet, even though we haven't had a huge altcoin run up just yet, it's not going to become apparent until it does happen, right? So we have to look for these early warning signs. All right, so let's go ahead and take a look at most of these altcoins, guys. I got to tell you, the Bitcoin comparative charts are looking good, especially considering the indicators here. All right, all three of my indicators here are flashing that Ethereum here on the weekly comparative to Bitcoin is looking nice. The volume has been sound across most major exchanges, and the price has been really nice as well. Just to highlight it here, we'll take a look at the daily. I mean, again, consecutive days of upward price action for the most part, outside of 2 days here where we had a slight pullback, but then continued on the rally. I mean, this has been great. We've brought ourselves back here to ratios we haven't seen since July of 2019. So we're covering a lot of the relative losses here. Taking a look here on the weekly, though, we'll take a look at a few other players. XLM BTC. XLM BTC, huge volume on Binance. Huge volume. In fact, the other day, we set the highest level of volume since all the way back on a daily candle since 2018 in January. Very significant stuff, right? And we're still building this weekly candle here, but we've already surpassed levels here. And let me actually make sure I want to get my numbers right. Yes. So we've gotten back up and surpassed levels that we saw in May of 2019 when Bitcoin was having its monstrous rally and we started to get a little bit of speculation in altcoins. And we are very close, and I think we're very well on our way to setting a higher week than what we set here in March of 2019 and any of these previous weeks back here. So really exciting stuff to take into mind here as well. Again, the market right now is showcasing that kind of speculation in altcoins. But I'm going to go ahead, run real quickly through our top 3 picks. We've got Link, BTC. I'm actually going to take a look at the USD chart here because Coinbase is going to showcase us the real volume. In the sense of the USD gains, I'm liking the chart here. It looks like we very well might have bottomed at 150, a nice big even here. Again, the indicators here looking positive here. Again, the momentum here started changing a while back on the daily. On the weekly, we can't get much insight, though, because this is relatively new. So take a look at our indicators. Take a look at Binance. This, to me, again, is looking like it needs some time for the indicators to catch back up here on the weekly, right? We're going to need another week or two before I really gain confidence on this. Again, because my indicators here, as much as I get across here on the stochastic RSI, looks like it might be curving up the MACD here. It's not looking like it's providing a cross, and also the momentum, again, is not looking in favor right here. So we need to see a few more weeks before I get really confident. All right, so Raven BTC, let's go ahead and take a look at it. Raven BTC looks like it's got a MACD cross coming soon. The momentum has shifted after a few weeks, and it looks like the stochastic RSI is about to pop up. I look for at least 2 out of 3 of these, but I'm going to be hoping for a little bit more than that. I want to get all 3 indicators coming through, and it looks like it's setting up for that. All right, and the last one we're going to take a look at is basic attention token to Bitcoin. And this one is looking nice as well. Squeeze of momentum's already showcasing. Sorry, I've got my text that I have here for what I write in my newsletter sometimes. But taking a look here, the stochastic RSI coming back into the mid channel here from the bottom. We see the MACD cross coming up here very soon on the weekly, and then also squeeze momentum indicator closing in. So again, I'm looking a little bit ahead of time here, guys. I'm not getting too eager. I've already got my positions. When these indicators confirm to me on the weekly that the trend is shifting, right? I use these for a pretty consistent guess and probability of where the market is going to go. It's where I make sure that the odds are relatively in my favor. You know, when I get about 3 of these indicators flashing across the board on the weekly on most of these major plays, you can bet I'm going to be adding into altcoins. Any extra capital I get, averaging into altcoins. All right, I keep hitting my thing. I think I have my mic stand a little bit too low. I apologize about that. Let's go ahead and take a look at equities. All right. So equities right now, to be fair, guys, you know, taking a look at my suite of indicators and just also the general price right now, with the Fed cutting interest rates, I think there's no doubt there's a chance for the NASDAQ, for some of the major indices to revisit back to their all-time highs. I'm not showcasing anything in the short term that makes me feel bearish unless there is continued developments in the repo market that scares off investors. In the sense of gold and silver, right? Continued correction here in gold, in my opinion. I think we've got a ways to pull back here down to a range such as around 1420. One of these previous levels of resistance here for gold. Possibly the worst case scenario would be 1360, but that's going to be very difficult to find gold correcting more than, I think, more than $100 at this point. Silver as well. Last market we'll take a look at, then we'll dive into the news. Again, silver looks like it needs to correct as well. Come back down to the support range around $16 at worst. But I would like to see this again start to hold here around $17, big even level, general resistance here, and start climbing back up and continue to gain in the gold to silver ratio as we start to see speculation in commodities. Like I said, worst case scenario would be $16. I think it's more likely to stop at 17. All right. So we've taken a look at pretty much most markets here. I wanted to go over some quick updates. So there's a lot of big test nets coming in the protocols. We did our speech a long time ago, the protocol wars, when I visited Chiang Mai in Thailand at the Tokenomics conference. And it was seen as a pretty good speech and stuff. I think most of you guys liked it. And it was my first actual keynote for crypto, which was really exciting. But NEO and Ethereum and many other protocols are starting to come up with new upgrades to their testnet to showcase what they're planning to bring to the official protocol in the sense of increasing scalability, increasing potentially privacy, enterprise use case, things of that sort. And the NEO 3.0 testnet has launched recently, giving a little bit of a boost to NEO in the short term. The other thing as well to take into mind in the sense of the protocol wars is that Ethereum is going to be releasing its update on its testnet. In this case, it's going to be Istanbul, which is actually broken up into 2 different upgrades for the Ethereum network in the long term. They're planning to put the first phase of the update into the Ethereum network, which is going to be likely a progressive proof of work change to the underlying algorithm for mining Ethereum. And that's going to be sometime this year in 2019, probably towards the later part of the fall or winter time. And then outside of that, we also have the secondary update, which is going to be in Q1 of 2020, at least as of current expectations. What's nice about this is that we're getting much more solidification on when these updates are going to come. And that final update on Ethereum is likely going to be a proof of stake update, right? And in the sense of traditional markets, we have the Federal Reserve continuing to play into the same exact activities that we talked about the other day, where the Federal Reserve injected originally $75 billion into the repo market, which is the market that banks do overnight lending in, has now leaped up to more than double of that. at $200 billion. For many consecutive days, the Fed continued to inject credit, or capital in this case, I guess is the more proper term, into the repo market to support commercial banks. Now, bear in mind, as we talked about, this is collateralized. Like quantitative easing, they are providing some form of asset. But the question here that would separate it from either being like QE or not is whether or not the assets are toxic. Are they sound assets like U.S. Treasuries that provide a consistent yield and are backed by the faith of the federal government? A lot more secure than most investments out there, to be fair. I know most of you out there are like, yeah, Nick, okay. But you get what I'm saying, right? This is one of the more secure tiers of assets. Let's be fair, right? And is it something like Treasuries or is it toxic assets? And then my other question as well is, even if it is Treasuries, right? Even if it is assets, right? Are these for the short term, as the repo market is supposed to be, right? Is this reverse repurchase agreement that the Fed did, is it for the short term or another way of masking it as quantitative easing in the short term, right? So this is my problem here. We are still running off of little to no information here, understanding who did these transactions, what types of assets they gave the Federal Reserve. I mean, at least with the QE, we can see in the balance sheet what the central bank bought. They provide this data to us because in this case, when we take a look at the balance sheet, we can see that they own a certain amount of treasuries, that they own a certain amount of mortgage-backed securities, that they own a certain amount of equities if they were to have some on the balance sheet, right? And we can see over time, as the balance sheet reduces, through the data sets that the Fed provides through the, I think it's the Federal Reserve, or FRED is usually the acronym and stuff. It's one of their big data sets where you can actually go through and take a look at all the economic data. And they showcase what they're taking off. And they've even told us this. They've talked about how they're reducing on a monthly basis the amount of toxic assets like the mortgage-backed securities, how much of the treasuries that they're taking off their books, right? So, again, we are in a very interesting spot here. And if this continues any more than the $200 billion we've already done, this is going to be a really big warning sign. Because to me, it's going to appear that this is not short-term relief to the Fed funds, or excuse me, to the repo market here. We're already taking up to $200 billion. I wrote off the other day that it was like, oh, it's only $75 billion, right? This might be a little small mishap, or there might be a little bit of a liquidity squeeze right now. To me, what this might appear as is that there's either some huge insolvency issues in the banking sector and the Fed stepping in through this other monetary tool that it has, or there's too much overexposure to investments right now, right? To treasuries, to equities. But I don't think that would really just come up out of nowhere like this, that banks wouldn't expect that. So I believe it's probably the first one that we mentioned, the potential insolvency of some of the smaller mid-sized banks. So I'd like to know what you all think about that. Want to let you all know real quick, as I mentioned a few times in the past, I'm going to be attending a lot of conferences here over the next few months from October and November. So if you guys want to see me in Malta, come to the Delta Summit. I'm going to be here from October 2nd to the 4th. I'm going to be speaking as well. Outside of this as well, I'm going to be speaking at the Litecoin Conference from October 28th to the 29th. This is going to be held in Las Vegas. And I've got another conference in Las Vegas right after the Vegas Blockchain Week. I'm going to be at the later phase of the conference. So if you guys would like to check that out, check the links in the description. And then also I will be at the Capital, the Coin Market Conference that is going to be hosted from November 12th to the 13th in Singapore. A lot of traveling. I haven't done any traveling over this summer. I've been sticking home, working on my startup at the moment, working on content for the channel. But I'm very excited to go travel a little bit and hopefully get to meet some of you guys in person. I know we don't get to do that because I'm talking to you through a screen here, but it is always awesome to meet you guys. And if, again, you want to check out these conferences, make sure to check out the links down below because we've got all the necessary discount codes down below with the either unique links or the unique codes to use when you're registering for your tickets. Anyways, everyone, that's it for the video. I hope you all are doing well, and I hope you guys have a wonderful weekend. Again, I'm going to upload some videos over the next few days, and I think they'll be really good educational pieces, so I recommend you stick around for that. They're going to be good ones, even if you like the daily updates alone. If you like hearing me ramble, I'm certain there will be plenty of rambling to go around. Anyways, hope you all are doing well, and I'll see you all next week. Stay tuned.